Alright, so in this video, I'll be talking about fixed range volume profiles, different ways that I pull them, different ways that I use them, and this tool is probably one of my most used tools in trading because for the most part, I am trading ranges. Price more often than not is ranging. Even if on a higher time frame we're in an uptrend, we're going to form ranges on the way up that we can trade. And so that's primarily where I like to trade because there are many great opportunities inside these ranges. You can see here price started ranging a little bit. We started consolidating after we kind of formed a range here, and we can even drag this volume profile back. And what you'll notice is price likes to go from the highs of the range to the lows of the range, back to the highs of the range, back to the lows, to the highs, back to the lows, and these provide many great trading opportunities. Of course, when you combine them with confirmations, I don't just take trades at the value area high and the value area low because there's always a chance that we lose the range or that we drop really far out of it and then just kind of reclaim it later. But in general, price will oftentimes move from the value area high to the value area low, or vice versa when it is trading in a range. It will go from the highs to the lows, basically chopping around. And so specifically, I want to go over a few different ways that I pull my fixed ranges, a few different ways that I identify ranges, and some techniques I've used to get more accurate value areas, especially on the lower time frames. Because on the higher time frame, I kind of eye out the ranges a little bit more. I will just kind of eye out what I consider to be the range and pull the volume over all of that. And the reason for that is because on the higher time frames, there's a lot more volume, there's a lot more data to take. So changing the value areas a little bit typically won't change the value area that much. I can drag it back and the levels stay pretty much the same, whereas on the low time frames that isn't really the case. When there's a lot less data to go off of, then changing the fixed range pull slightly can change the value area drastically. And a lot of times I am scalping low time frame ranges. And so here are a few of the techniques I use to try and get more accurate ranges on the lower time frames. So I'll use the bar replay tool and go back here a little bit. And let's say you kind of notice that we are forming a range here. And this is on the 12-minute time frame. It's kind of a low time frame, but a lot of times I will mark out much smaller ranges like something like this. But let's say you wanted to trade this range here. One of the strategies that I like to use to identify ranges is simply marking out the highs of the range and the lows of the range with a horizontal line. Let's see if I can get that on a high. And essentially just pulling the volume over all of the price action that is in between these lines. So once I got the high and the low marked out, I will look to the left and see where price exits this range going backwards. So in this case, that would be right about here. And so I can pull my volume from this point, and that is my range right there. That is one of the strategies I use, especially on low time frames, because like I said, if you move this over just a little bit, it may change the value area drastically. I don't know if it does in this case, but that is one of the ways that I do it. And for fun, we can let this play out a little bit and see what happens here. So we got to move down to the value area low. Let's go ahead and check market cipher, see if we see any bottom signals here. And on the 3-minute, we do see divergences. We see momentum increasing as price put in that lower low down below the value area low. And so I might want to take a trade here. So maybe I would want to, enter long here. I'm basically just trading the value area, so who knows where my invalidation is going to be. Maybe I would have put it down below the daily just to be safe. And my first target would be the point of control of the range, and the second would be the value area high. So, this is just a little quick example. Let's see if this plays out. Well, we got to move up to the point of control. So I would have hit TP1 there and probably put my stop loss to my entry, or at least a break even. So we'll leave it down below the value area low in this case. So, okay, there we go. We got stopped out of that one, but still, we got to move up to the point of control. We locked in a break even here. And let's go on the low time frames again. Did we see anything else that would make us want to trade the value area low again? And yeah, we do see 1 minute divergences here. I typically don't just trade 1 minute divergences. I mean, sometimes I will, but I prefer to see more confirmations than that. And I mean, 3 minute money flow increasing, that's something that gives me confidence. I'd probably also look at Coinalyze, look for confirmations there, but hey, we can say we'll enter another trade here. We're at the value area low, we see the divergences, and let's see, will we get a move up to the value area high this time? So yeah, we did. So yeah, there you go. The point of control shifted when I adjusted it over, so I probably would not have TP'd right there, considering I entered right below the point of control. But you can see that, we saw bullish signs at the value area low. We very quickly got to move to the value area high. So that was just kind of to show you that, it is very possible to just look for confirmations at the lows or the highs of a range. And, oftentimes you will see a move to the significant volume points inside that range. Maybe you can look for bearish divergences up here and maybe look for a move down to the point of control or the value area low. Well, let's let this play out a little bit more. So in that case, we definitely did not get a move back down into the range. And looking at market cipher, it appears, well, right here kind of threw you off a little bit. Money flow is coming back down, a little divergence in money flow. But then we just got a lower retracement, little trigger wave here, and that's when the money flow really started to grow. And that is actually a short that I took up here. We did form some divergences on this way up. But yeah, we never got to move back inside the range. We just ended up breaking out, and that just goes to show that at some point the range is not going to work anymore. So let's actually go back to right here and kind of replicate that same thing on a smaller time frame. You could have said we were trading in a range right here. Actually, I'll go back a little bit farther to right about there when it seemed like we were starting to form a range. We had a high, a low, price kind of, consolidating, not getting these violent moves where, price action's kind of slowing down. Maybe you could have said that, okay, it looks like we're starting to form a range here. So I'll do the same thing. Horizontal line at the high, horizontal line at the low, and look for where price exits that range, and that would be right here. So pull a volume profile of this price action, and since this is a very low time frame, I'll go down to the 1 minute, and let's see what happens here. So, we just kind of got to move outside the value area. Let's see what happens here. So we're kind of consolidating below the value area, and okay, we got to move down towards the lows of the range, which would be right here. As long as we don't break this point, then we're still inside the range. And I mean, you could say that even if we come down, take out that low, then you'll just move this line down to kind of extend the range a little bit. And that wouldn't change anything because we drew the range from right here. Price exited the range at the top, not on the bottom. So, changing the low of the range doesn't change anything. And we'll keep letting this thing play out. So let's see what happens if we reclaim the value area, which we just did. We'll adjust that back. Price got back inside the value area, and I mean, immediately got to move up to the point of control. What you could do in this case is say, okay, if we get a retracement back down, maybe look for price to now find support at the value area low, maybe around this 0.5 fib. And that might be a trade idea I would have at this point. See if we reject off the point of control, which we didn't. We actually broke above and then held VWAP as support before getting a move to the value area high. And we do see some divergences right here on the 1 minute time frame. Not the most confident signals, but when you're trading a small range, sometimes you have to look for the low time frame confirmations. And in this case, that 1 minute divergence brought us all the way down to the value area low. So I don't want to spend too much time going through examples. You kind of get my point. Basically, I like to look for confirmations at the highs or at the lows of a range. I honestly prefer when price is doing something like this, just kind of moving sideways, not really in an uptrend, not really in a downtrend, because this is where I found that price respects the ranges most often. But let's go ahead and exit this now, and let's look at some other ways to pull fixed ranges. So, looking at price action currently, Bitcoin has gotten a pretty aggressive move to the upside. Now we are consolidating right here. And one of the ways I like to pull ranges after, we get a large move and then a consolidation range afterwards is I'll simply take the value area from the swing high and pull it like that over the consolidation range that follows. You could do that same technique where you put a line at the low and maybe pull it over to where price exits. So in this case, it'd move over one candle. And does that change the value area at all? It does a little bit. The value area low moves down a little bit, but still, it's pretty much the same. And in cases like this, you might expect price to not go from the highs to the lows as often, unless we're actually gonna, continue ranging here. But these still can be useful. Let's say you think this was a swing high, and you think we're gonna form a downtrend here. Well, the value area high is, potentially a good spot to look for a lower high. If you saw the signals for it, or if you think that, we're just consolidating here before another move to the upside, then maybe you could look at the value area low for a potential entry, maybe look for confluence with this golden pocket. These value areas can be useful even when we're not really range trading. And so, whether you're just scalping this little consolidation range afterwards, or you're looking to find an entry on a larger move, if you think it's going down or you think it's going up, that value area can help you, come up with a plan for an entry. So another way that I like to pull ranges, or another way I like to use them, is basically taking the volume of a large move under this range folder, and I find this thing right here. I basically have a fixed range pulled from the swing low up to current price. You could pull it to the swing high and just take the volume of the move. And if we end up putting in another swing high, then maybe adjust it to that swing high. But these kind of fixed ranges can be useful as well. Looking at the volume of a move, if you are, let's say expecting a retracement here, maybe you'd look to the value area high for potential support, for a potential higher low. That's a possibility. I would definitely want to see confluence around here. That is another way that you can use them, is looking at the volume of move. You can also look for those high volume nodes, the areas where we had a lot of volume, and that can be useful as well. The point of control of this range, or this volume area, I guess I'd say, is all the way down here, and it seems like most of the volume for that move was towards the lows. But also we do see this large amount of volume above the range outside of the value area, which is some useful information to have. It shows that there's lots of trading activity going on out here, and maybe shows that we don't necessarily have to come back inside of this volume range. Maybe it shows that price wants to continue moving away from that. So those are some other ways that you can use the fixed range volume profile. I think it's a really great tool. I think it can give you better information than just using the, let's see, where is it? The visible range volume profile, which kind of shows you the volume of everything that you see on screen. That can be helpful in its own ways, especially for like higher time frame volume levels, looking at like where the most volume was over a longer time frame. Yeah, there are really lots of ways that you can use this fixed range volume profile. And, these are a few other ways that I like to use them. Obviously, I prefer just trading the ranges, looking for an obvious range and trading that. But you can use it even when we're pumping, when we're dumping. It's good to have an idea of where the volume is. And it's nice to be able to narrow down the price action that you actually want to look at and see the volume of. So, like I said, I mainly like to look for those areas where we form obvious ranges, and I prefer to trade those. You see those things often, even during times of volatile moves. You can see those low time frame ranges that maybe you could have gotten an entry at the value area low here as a little scalp, just targeted the high, but then it ended up running. That's why a lot of times when I'm trading ranges, I like to take partial profits and basically leave myself exposed for if the range breaks out. Well, I think that is about it for this video. Thank you all for watching. If you enjoyed, please consider leaving a like and subscribing, also leaving a comment, and I will see you all in the next video.